Welcome everyone. Welcome to our foundational two-part course, Anatomy of Price, Price Action, and Smart Money Logic. Today, you're watching the first part of this masterclass, fully dedicated to institutional capital logic, market structure, and liquidity hunts. We'll uncover how markets actually move and who's pulling the strings behind the scenes. In part 2, coming out very soon, we'll dive straight into practice, exploring specific entry points, order blocks, imbalances, and breaking down 5 real historical trades step by step. Watch this first part to the end, subscribe to our channel, and let's get right to the point. Step 1 is understanding who controls the market. Retail traders are used to thinking that prices rise or fall because of terminal patterns, trend lines, or textbook chart patterns. But that's a deep misconception. The market is controlled by smart money large institutional players, hedge funds, central banks, and market makers. Their main challenge is scale. They hold billions of dollars. They can't just press a single buy button because their massive volume would instantly send the price sky high, filling their orders at the worst possible prices. They need the opposing side of the trade. They need liquidity.
Trade global markets with spreads from 0 pips and forget about overnight position rollover fees. The swap-free service is designed for long-term strategies and active scalping. All net profit remains in your account. With InstaForex, your trading capital always works at peak efficiency.
So, what is liquidity in the language of institutional capital? Liquidity is the fuel that powers the market engine. On a chart, liquidity sits right where the retail crowd hides their protective orders, their stop losses. Remember the golden rule. Your buy stop loss is an automatic sell order, and your sell stop loss is an automatic buy order. For a massive fund to build a huge buy position, it is physically necessary for thousands of small traders to be selling at that exact same moment. That's why market makers are forced to intentionally drive the price straight to where your stop losses are resting. How does smart money identify these zones? The simplest way is through equal highs or equal lows. In beginner trading materials, these are called support and resistance levels, or double tops. Take a look at this slide. When the crowd sees 2 identical peaks, they view it as a strong resistance level and open short positions, hiding their stop losses right behind those peaks. To a retail trader, it's resistance. But to a market maker, these equal highs are a giant pool of liquidity that they will definitely come back to target.
Making mistakes in the financial markets is no longer frightening. The unique risk insurance program allows you to fully protect your deposit. In the event of losing trades, the company compensates for losses. Secure trading and 100% protection begin with an InstaForex account. Follow the link.
Now take a look at how the liquidity sweep or sweep actually happens. Price makes a sharp, aggressive impulse upward, breaching those equal highs. In that exact moment, 2 things happen. First, the stop losses of sellers are triggered. Second, inexperienced breakout traders give in to emotional FOMO and start buying the breakout. The market maker fills all those buy orders with their own sell orders, completely accumulating their required volume and instantly reverses the price downward. A manipulation has occurred, and retail is left taking the loss once again.
No time for routine work and deep chart study? Earn from the experience of professionals. The automated Forex copy and PAMM services let you copy top traders' positions. Your funds remain fully protected. Open an account with InstaForex to invest and trade like a pro.
To understand which phase institutional capital is currently in, we use the Wyckoff Accumulation and Distribution concept. Accumulation occurs at market bottoms after a prolonged decline. The market maker keeps price inside a sideways range, gradually buying up the asset from the panicked crowd. The final phase of accumulation is often a false breakout of the lower boundary, a so-called spring. The institutional player triggers the last stop losses, sweeps all liquidity underneath, and launches a powerful uptrend. The reverse process is called distribution. It happens at the very top of the market following a strong rally. Institutional capital gradually unloads its massive position into positive news and a hyped crowd buying right at the peak. Here, a final false breakout of the upper boundary occurs, a manipulation over the highs. Once the institutional player's volume is fully locked in and offloaded to retail traders, support vanishes and price plummets into a deep markdown.
Trading is not just charts, it is a lifestyle. Fund your account with at least $333 within a month and claim premium gadgets, crypto bonuses, or luxury cars. InstaForex offers the market's best prize terms for this.
Now let's move on to market structure. Structure is your ultimate compass. Any price movement consists of ascending or descending structural points. In a bullish structure, every new high is higher than the previous one, and every new low is also higher than the last. As long as this sequence remains intact, we have a healthy uptrend. Remember, we never trade against the current market structure until we get a clear confirmation of a structural break.
How to multiply profit with minimal investment. Use a unique deposit format that multiplies your capital on a progressive scale and flexible leverage of up to 1 to 5,000 for large trades. All these growth tools are available only on the InstaForex platform.
The first core concept of structure is break of structure, or BOS for short. A BOS is confirmation of trend continuation. Look at the chart. When price confidently breaks and closes with a candle body above the previous structural high, a BOS occurs. This tells us buyers are in complete control of the market. Momentum is on their side, and the trend is set to continue further. The second, even more crucial concept is change of character, or shock. A shock represents a shift in price behavior, the first signal of a potential trend reversal. If, during an uptrend, price fails to make a higher high, turns around, and closes with a candle body below the last protective structural low, a CHOCH takes place. This signifies that institutional capital has taken control. The uptrend is officially over, and the market is entering either a distribution phase or a downtrend.
Profit from Bitcoin and altcoin volatility 24/7 without complex wallets or buying the coins themselves. The CFD format with leverage allows you to profit from both strong rallies and price declines. You can trade this trending instrument around the clock with InstaForex.
Let's connect all the concepts from this first part into one complete picture. What does the ideal anatomy of a price reversal look like? First, price makes a false impulse upward, sweeping liquidity above equal highs. Then it aggressively returns back inside the range, forming a structural break, the CHOCH signal. Following that, price gives a local pullback, prints trend continuation via a BOS, and moves into a deep decline. Once you start recognizing these algorithms on the chart, the market stops looking like chaos. Let's summarize the main takeaways from part 1 of our masterclass. First, never try to guess a market reversal without a liquidity sweep and confirmed structural shift. Second, remember that support and resistance levels are liquidity pools where institutional players come to hunt stop losses. Third, always wait for a candle body close to confirm a BOS or CHOCH. We don't trade emotions, we trade facts on the chart.
Protect your money from inflation and crises. Precious metals are a classic tool for capital preservation. Investors choose gold and silver contracts with instant order execution. Click the link below the video and test metal trading with InstaForex.
That brings us to the end of part 1 of our fundamental masterclass on price action and smart money. Now you understand how institutional capital thinks and operates. Be sure to hit the like button and leave a comment below. Have you ever caught your stop losses getting swept in these liquidity zones before? Most importantly, subscribe to our channel and turn on notifications. Part 2 of this masterclass is coming out very soon, where we dive into the most profitable practical techniques. We'll thoroughly cover order blocks, imbalance zones, entry rules, and break down 5 ideal historical setups step by step. Study the structure, protect your capital, and see you soon in part 2.